What is up, traders? What's happening? It's your boy Mamoon Ahmed. Thank you very much for being here for this week's dose of technicals, which is super exciting stuff. But before we actually get into it, I want to give a quick shout out to those of you who have been sending me messages of support and feedback, and congratulations to those of you who have actually been benefiting from just the past couple of videos. Some of you guys have been taking a few trades and over the week, and you know, for these videos to actually impact people around the world, it's actually pretty inspiring and crazy, and more reasons as to why I should keep doing this stuff, and more reasons for those of you who like free content, okay, free trading educational content, lessons, weekly analysis, more reasons for you to subscribe right now. Okay, so if you haven't already, please do go ahead and subscribe right now, and as I go through these lessons, please do leave questions and queries. I'll be more than happy to answer them and get back to you as well. Super exciting stuff coming as well, because you know, if you are completely brand new, then you gotta watch out and keep an eye out for the TLC method, which is in the link description below. It's only for those of you who are completely brand new, like you have no idea. It's you know, it's education based around what I wish I knew, okay, that I wish I was taught when I first started, okay, complete breakdown, you know, dummified, so that you know anybody can really understand it. Okay, again, if you're completely brand new, go ahead and check it out. It's going to be sent directly into your inbox, into your messenger. Really exciting stuff. I mean, I've been working on the TLC method for a while now. Okay, so without further ado, let's quickly get the introduction and disclaimer out of the way, and we'll dive straight into this weekly dose of technical analysis. So we have euro dollar on the daily time frame. We are going to quickly have a look at the higher time frame, weekly time frame, see how last week's price closed. But before we do, let's quickly have a look at one of the outcomes that we anticipated on euro dollar last week. Another potential outcome is that we don't break, okay, and we have something like a false break where price shoots back up above the 1.1320 level and then uses the 1.1320 level as support. So as you just saw, one of the outcomes that we anticipated was a false break to the lows of the 1.1320 level, where we have had price come back up and close above that level. Okay, now if you don't know already, when we have a bearish move downwards followed by a bullish move upwards, we have met support. Okay, so this is the basics of support and resistance. And if you, again, you're completely brand new, please do be sure to check out the TLC method, okay, in the link in the description, where we cover trends and levels, okay, support and resistance and candlesticks. Okay, very important if you're completely brand new that you understand this, and throughout my analysis you'll notice that this is all that I'm talking about, okay, nothing else but the TLC method. Okay, so now we've had the bearish move followed by a bullish move. We can now mark that level, this level right here, as support. Okay, and so let's pay attention to the price level that we've turned away from, 1.1214, which is where it happens to be, and that's not too far from, okay, a 20 level, okay, a 200 round number level, a psychological level. You can see it's not too far off from that level. Real quick before we jump onto the weekly time frame, let's confirm this level by simply just moving to the left. We can see it's a little choppy through here, not too happy with what's happening here, but if we carry on moving to the left, okay, so we can see we've rejected it here, okay, a little bit choppy here, boom, we found support, really nice and clean support, resistance, really nice and clean resistance, support, okay, resistance, support, really nice, clean, okay, we have some resistance right here, okay, really nice and clean. All right, so I'm pretty happy with that level, okay, and to keep it and mark it out as a support level. Remember, support levels, they're zones more than they are a specific price point, or by the pip, if you will. Let's quickly just change this color. All right, okay, so this is a nice support level that we found. Okay, so now what are we expecting, what can we anticipate to happen last week? Well, I'm actually just simply based on price action and considering how strong we've closed on the daily as well as the weekly time frame. Okay, so here we are on the weekly, and we can see last week's candle closed very strong, very bullish. Okay, it rejected the lows, very long tail bar, long tail candlestick, Okay, last time we had a long tail candlestick with a strong close was here, and you can see what happened following that move. We continued moving higher. So let's drop back down to the daily. I want to give you a quick example of what I see here and what I mean. So notice this again. I could just notice something here in the past, but we're in a downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Okay, and right now we have no further data except for the last thing that's happened, which was what happened on last week's close, a very strong bullish candle. Okay, and so if we look to the past, I can actually point something out very similar. Lower lows, lower highs, lower lows. Okay, so we have support and then a very strong close above that support. Okay, again, lower lows, lower highs, lower lows, lower highs, very strong close above that support. Are we going to continue the downtrend? Okay, are we going to continue further down, creating lower lows? So if we just look at what happened here, we actually went all the way back up. So we had a strong close. If we just pay attention to this candle, very strong bullish candle here for a second, and ignore this pin bar and ignore everything that's happened afterwards, at that moment in time you would be in a similar predicament as to what we are in right now. Okay, we've got lower lows, lower highs, lower lows, very strong bullish candle above previous support, resistance, you know, very strong close. Again, lower lows, lower highs, lower lows, very strong close, similar predicament. Okay, and so now we can look at further potential outcomes, right? And one of the things that I'm looking at is my bias is slightly now going to change considering the strong close. I'll be looking for any retracement down towards the 1.1320 level to go long. Okay, and that's outcome number one, right? And if we don't get a retracement and we just move higher first, all right, then I'll be looking for selling opportunities up towards the 1.1500 level. Okay, similar to what we experienced here. So we have lower lows, lower highs, resistance, lower lows, okay, support, right, and then a lower high back above a support level and then up towards a resistance. Notice this candlestick right here, we had resistance, price went back up towards the resistance and came down, creating a higher low. Okay, so we can expect something similar where price now heads up towards the 1.1500. We might get some selling opportunity to go short temporarily, or not even temporarily, but I would you know, consider taking profits, shorter profits. But at the same time, remember, as long as we are below the 1.1500, we are still in a downtrend, so it still carries a higher probability for really good risk to rewards to come back down and target 1.1320 level. But considering the strong close, I'm also going to be really focused on for any potential long opportunities back down towards this support level. And if we get really weak closes below the 1.1320 level, then again we can continue using that level as a resistance for potential shorting opportunities as well. Okay, so that's euro dollar. Let's swiftly move on to our next pair. So for next week, we're pretty much going to stick with what we've analyzed last week, which is instead of looking for buying opportunities at 1212, we're going to be looking at 1200 round number. Definitely a level we want to be looking for price action. As long as we remain above 1180, then my bias will remain long. So as you guys can see, gold pretty much played out exactly how we anticipated. We came down and created that high low right at the 1200 level, again as anticipated. We did create that indecisive candle right there, and the following day we did retrace down in towards that indecisive candle. Unfortunately, I wasn't able to get in on this trade, which, you know, kind of sucks. But you know, you should never really feel as if you've missed out on opportunities in the market, because opportunities are always occurring, are always happening, and you just got to be patient and wait it out, and understand that, you know, fear of missing out is actually one thing that a lot of people actually feel, and causes people to make impulsive decisions and jump into runaway markets meaning, you know, price is just shooting, and they'll buy, and they'll carry on buying, and then, you know, boom, price goes against them. So, you know, don't ever feel as if you've missed out on any opportunities. Okay, so for the week ahead, what are we expecting? We've created higher lows, higher highs, higher lows. Okay, and we are right now slap bang in the middle of previous higher highs and previous higher lows. So really anything's likely to happen. One outcome that we can expect is the market to continue moving up, creating higher highs, which means we may want to look for opportunities on the lower time frame to see if we can get in on this. Because remember, all right, again, I cover this in the TLC method, even though it looks like on the higher time frame it's just shot straight up, on the lower time frame we can actually see that it's zigzagging its way up, and it's on these little zigzags that we can look for opportunities to go long. You know, in a trending market, you always want to be buying low, and these are, you know, this side of the trend is always at higher lows, is always where you want to be looking to be buying. Again, check out the TLC method. All right, it's in the links in the description below. And so that's outcome number one. And what we can also expect is price to retrace a little bit, giving us an opportunity at the 1212 level. Why? Is because we've used it as support along here, resistance all along here. Okay, we've used it as support here, and now we can expect price to use that as support, which would be great. Okay, it would be amazing if price does come down to this level, giving us an opportunity to actually go long. Okay, so that's what I'm looking at for gold. I'm not really, again, as I've always mentioned, I don't really like looking for selling opportunities on gold, but we do have resistance along here, support along here. We might find selling opportunities here. And you know, another perspective, someone else can look at it and say, okay, we've got lower lows, lower highs, lower lows, lower highs, and look for any selling opportunities along here on the lower time frame. And if you do, just know that you will be going against a higher time frame trend. Okay, you will be going against higher time frame trend, so shorter profit targets, and manage risk, especially if you're going, I mean, you should manage risk anyways, but you know, manage your trade effectively if you are going against the higher time frame trends. But so for me personally, definitely be looking at the 1212 levels to go long on gold. All right, so let's move forward on to our next pair. I do really want to keep this video short. In fact, I'm trying to keep it shorter than last week's video, so let's move along onto our next pair. Another outcome that we can potentially look at is we might even get some signals along here on the daily time frame to actually go short, similar to something like this, similar to something like this. Okay, something like that, something like that, something like that. So if you get, you know, price action selling opportunities at within this resistance area, we definitely want to be going short. So as you saw in one of the outcomes that we anticipated last week was some type of a rejection of the 114.200 level, which happened pretty nicely. In fact, you know, by the pip act, in fact, price rejected that level really nicely, came all the way down. And so now let's just quickly look at market structure. We have higher highs, higher lows, higher highs, higher lows, and we are right bang in the middle of previous higher highs and previous higher lows. Okay, so what can we expect and anticipate that's likely to happen for the week ahead? Well, one of the things that we can expect is, if we just look here, I just want to, and every time I refer to the past, I'm kind of give you an example of how price is likely to look like. Okay, so we've had the initial sell-off, and we have had price come up, come down. Okay, so we've had the initial sell-off, price goes up, and it came down. So you can see these two examples look pretty similar. And what happened here is market started ranging. Okay, so market is likely to potentially start ranging, and in a ranging market you want to look to be selling at the highs, okay, and buying at the lows. Okay, and as long as we remain above 111.800 level, then you know, we want to remain long, because you know, we are in line with the trend. This is a higher low right here. Okay, this is a higher low, so we want to remain in line with the trend. So for the week ahead, you know, we can expect slight retracement. Okay, we may need to drop down into the lower time frame and identify trend. And in fact, if I quickly do that for you real quick, we can really see lower lows, lower highs, lower lows, lower highs. So we can expect a slight retracement where we may even get, and if we on this time frame, we can actually see really nice support and resistance levels along this price level, 113, 300 round number, 400 round number. We can expect price to reject that level and continue on its way down towards 111.800. Okay, where we really do want to look for buying opportunities in and around this price area, price zone. And remember, you know, we always want to wait for price action confirmation, candlestick confirmation. Okay, so that's one of the outcomes that we can expect. Is one of the two, is either retracement to the highs for it to come down, or for price to continue dropping down, and use this as support where we can look for buying opportunities, and we may even start, ranging for a while, which if we are ranging, then we want to be buying, selling the highs and buying the lows, giving us really good opportunities. This is a decent enough range here, price range here. Let's see, we have 200 pips or so. So decent enough range here for us to be able to find really good risk to rewards, considering that we buy low and we sell high. Okay, so that's what we're looking at on dollar yen. Okay, and let's quickly go ahead and move on to our next pair. Alright, so last week what we discussed on euro pound was this 0.8720 level, where we anticipated for price to use it as support, for us to be able to get in on a counter trend trade. Why? Is because overall we are in a downtrend, lower lows, lower highs, lower lows. So we're in this downtrend, right? And kind of anticipated this downtrend to continue, and maybe even find resistance at a 0.8800 round number. That didn't happen. We had Brexit related data news come out, Theresa May speaking, and with Brexit there's a lot of uncertainty happening. Euro pound, I like to kind of really stick with the daily time frame, because we have this huge market range. Okay, market has been ranging in between these two extremes. Okay, market's always ranging in between these two extremes. Before we had any of this stuff happening, this is what I was calling the Brexit range. Even along here, this was a super fun time actually trading. We were selling the highs and buying the lows. Okay, and even along here we've been buying the lows, and I do remember selling the highs along here. I'll just delete the line, selling up along here, and ultimately continuing the trend considering how strong we closed, and then selling right up here. Okay, so ultimately we are in between these two extreme price ranges, and so with euro pound, what I'm expecting and anticipating to occur is, for the week ahead, is for us to be looking to be selling at these resistance levels. Okay, so real quick, I just want to point out a trade that I did take on euro pound on last week was this price coming up along at the 0.8880 level. We had price come down, come up. I got triggered in our trade right here. Had a really nice 4-to-1 risk to reward. Closed off 3% of my trade. Left the remaining running in anticipation for a lower high, and then lower lows down towards the 0.8800 round number. That obviously didn't happen. It went and stopped me out on the remaining of my position, which is fine. It's cool. And now I'm going to actually get rid of this level right here, because if we zoom out onto the daily time frame, it wasn't the clearest of level, but it had a really nice quick opportunity to jump in and take a quick trade. So now zoomed out on this time frame, we're going to jump up a time frame, and I want to explain something real quick. In fact, we're going to go into the monthly time frame. I want to share something with you guys real quick. Here we have all-time lows and we have all-time highs. Okay, you see with the forex market, we're more ranging than we are just moving upwards. Okay, an example would be, let's look at Dow Jones real quick. Okay, and as you can see, we just like to be moving up forever. Okay, we think we're going to be moving up forever, but this doesn't happen forever. We can't. Okay, versus the forex market, if I don't know, go CAD yen. All right, this is again monthly time frame, and we can see that we're more ranging than we are just trending upwards forever. Okay, this is going back as far back as 1995. If you go on Dow Jones, again 1995, right? Euro pound, we're going back as my data allows me to go back as far back as 1998. Again, we can see that we don't just trend up forever. We come down, we go up, we might come down. So a quick question for you guys. Okay, are we closer to all-time highs? Okay, or are we closer to all-time lows? We're closer to all-time highs. All right, so it's much more of a higher probability decision for us to look for selling opportunities towards resistance levels than it is looking for buying opportunities. Okay, so that's the kind of perspective that I have, guys, right? So really do keep an eye on these resistance levels for the week ahead. Any price action along here, look for selling opportunities, and we may range up along these levels, but I still ultimately want to be looking for selling opportunities, and we may not next week, we may not even head as high as 0.89 800 or 0.90. We may not as head that we may have to wait a couple of more weeks for us to head up towards those highs, but definitely be looking for selling opportunities the closer we get towards the highs. Okay, why? It's simply because of the fact, the human nature, right? There's two main emotions that are really moving the markets. Okay, extreme fear or extreme greed. Okay, fear being at the lows and greed being at the highs, and we want to be selling when everyone's greedy, and the closer we get towards all-time high, the more greedy people become, and we want to rely on price action confirmation to tell us that there's likely a high probability chance of a reversal occurring, and that's pretty much what we want. If we do come up to these highs in this manner where we move up and then we move away rapidly, then similar to something like this, okay, where we moved up and we moved away with no tail bars, rejections whatsoever, and we just move away, be patient. Don't just start selling. Okay, wait for a retracement. All right, similar to what's happened here, where we shot straight up and we came straight down. Okay, again, if you can see that, you might want to zoom in for you guys here real quick. Within two candlesticks, we moved up and then we shot straight back down. Okay, and then what happened? Price retraced. Okay, so always wait for that retracement, and that's something that's likely to occur as well. Okay, where we shoot straight up, we come straight down, wait for a retracement. Okay, even up here, we came straight down and then retracement happened. Right, and we'll always have opportunities to jump into the market and then even break even. Okay, and we can get stopped out on a break even trade, which is good. It's fine. You want to be stopped out if the trade is going against you, right? So that's euro pound. It's actually looking pretty exciting, and again, the closer it's getting towards the highs, the more I am going to be inclined to looking for and keeping an eye out for selling opportunities. All right, so that's it. I want to kind of conclude. Thank you very much if you've made it to this far. Please do go ahead and check out the link in the description below, the TLC method for complete brand new newbies, and it's a beginner guide to an entry-level guide to really getting your feet wet into the financial markets. And even if you've been trading for a while, I mean, please do go ahead and check it out. Maybe a quick refresher as well, and some insight on my perspective of how I like to kind of share with individuals and people and my students on how I would like to have learned if I was brand new myself. So and there might be a few things that you would learn, and also most importantly, if you do go ahead and click on the link in the description below, I will be sharing videos and lessons on the financial markets that I don't do and may not share on YouTube as well. Okay, so with that being said, as always, guys, manage risk, plan your trades, change your plans, and have an amazing week ahead. Any questions, any queries, hit me up. It's your boy, Mamoon Ahmed. That's it from me. I'm out. Bye for now.